I talk with Bitcoiners every single day from all around the world, and there are very few Bitcoiners out there like Wyatt O'Rourke. Wyatt O'Rourke is doing everything to move the industry forward. He's the CEO of Basilic Financial, which is a financial management firm that helps people with sound money strategies. He's one of the co-founders of the Space Denver, which is a Bitcoin citadel located in Denver. And he's also the author of The Bitcoinization of Finance. So he's an author, he's a founder, and he's a CEO. He's doing it all. He joins the pod today to talk about the future of Bitcoin and how TradFi tools can help Bitcoin global adoption. I'm Jarrett Carpenter, and this is Future Signal. Wyatt, how you doing? Thanks for hopping on.
Dude, Jarrett, it's my pleasure. I just want to start by saying I'm super proud and happy for you for going independent. Big fan of supporting entrepreneurs, and it's kind of scary to take the leap, and tip of the cap, sir. I think it's amazing.
You're the first one to ever say that publicly on mic, so thank you. And you're one of the first people. We were talking about setting up this episode, and I'd hit you up, and I think I got to open the text, and everyone, we will get into Bitcoin. We will get into everything that Wyatt is doing for Bitcoin. But I had texted a bunch of people. And for those that don't know, and most people who watch the channel do know, I was working at Blockworks as a producer for a podcast, and I just decided to leave. And when I left, Wyatt and I were talking about setting this up. And I'm looking at my phone. That's what I'm looking at right now. And I told very few people because I was just kind of like keeping it on the low for a minute. And you said something that was absolutely amazing, and hopefully I can find it in the next couple seconds. Otherwise, it's not going to make sense. But it was basically like, welcome to the club. Let's do this. You know, it's something like, it's a fun ride. But if you're looking for it too and you can find it, please let me know. But it was something like, or maybe it's on X, but it was something like, welcome to the club. It's tough, but it's a good time. Meaning like going out on your own is tough, but it's a good time. So I just wanted to thank you because the way people respond when you quit your job and you go out on your own is so indicative of like where they are and how they see the world. And are they in abundance mindset? Are they in scarcity mindset? So you brought 100% abundance mindset. If I can find it, or if you could, did you find it?
No, I wasn't looking.
Because maybe, I don't know, maybe it was in X or something. But anyways, it was just awesome. So I wanted to thank you because it's one of the things that stood out. And I'm working on a blog talking about why I quit my dream job, and you will get the shout out in there because it was like,
nice.
Because you hit some people up and they're like, oh man, you're crazy. And you hit other people up and they're like, dude, awesome. It's going to be tough, but like, good job taking the leap. So anyways, thank you for saying that. Let's dive in. Now, I just listened to your episode with Bram. I love shouting out other podcasts. I think, a rising tide lifts all boats. So that's awesome. You were on Bitcoin for Millennials. People go find that podcast. It's great. People go find Wyatt's episode. Thought you did an awesome job. You said a bunch of stuff there. And I want to touch on some things. I don't want to repeat some things, but briefly give us your background and then also how you then got into Bitcoin.
So I always joke. It's not really a joke because it frustrates me, but I got a Keynesian finance degree, went to college, first heard of Bitcoin in 2017. It fit like every FUD narrative because I was pretty, entrenched in TradFi at the time, Warren Buffett was all of our, idols and all that stuff. Hindsight's 2020 and, sometimes we got to learn the hard way, but it wasn't really till 2020 when I got into Bitcoin, and it was during the pandemic. Was locked in my apartment. My roommate was a huge Bitcoiner, and he was just like berating me about Bitcoin. I was like, just to get him to shut up, listen to his podcast. I think the first one I listened to was, Preston Pish. We study billionaires, and he came from TradFi, value investing, background. So just really kind of connected with him and clicked. So I approached Bitcoin from like the finance and economics angle, and Bitcoin's one of those things, once you see it, you can't unsee it. And then, it just really, starts affecting a bunch of different parts of your life because you have to have the humility to understand or at least look at, all your previous priors. And it's like, whoa, what else was I wrong about, And so just really, started doing the 10,000 hours of, Bitcoin podcasts and researching it and going down the rabbit hole. And I'd worked in various fields of finance, asset management, real estate, IB, PE, and just really identified more as an entrepreneur. So I had a startup that went bust and wanted to, start another company because, why work a 9 to 5 when you can work all the time, And I knew at that point, I'd gotten really involved with the Denver Bitcoin community. My friends and peers were other maximalists. And so I wanted to start a Bitcoin company, but all my skills and experience were in finance and I can't code or anything. So I was like, shoot, how do I do this? And was just talking to friends and mentors and decided to adopt the RIA business model. So that's Registered Investment Advisor. So got my licenses, got registered. So I started, Basilic Financial. So we're an independent state registered RIA in Colorado. And, our mission is to help people with sound money strategies. So I brand myself as a Bitcoin financial advisor. We still do some TradFi stuff as well, but it's really focused on servicing, Bitcoiners.
In the Bitcoin financial landscape, how many people are like 100% focused on that? Because I know that there's, for example, when I think of taxes, I think of the network firm. Those guys are just crushing. They only basically focus on crypto at this point, crypto, Bitcoin. But when it comes to just Bitcoin, I mean, when you're at Vegas and you're walking around, are you rubbing shoulders with other people that are doing the same thing? The story in my head is there's less than like 100 people that are waving that flag right now in the U.S.
Oh, yeah. I would say definitely less than 100. I'm part of the Bitcoin Financial Advisors Network. It's an amazing group. I've learned a ton from those guys, and we have quarterly and gals, quarterly brain trust, calls, and I look forward to them, every quarter, just because it's exciting to share experiences and tools and case studies with each other and learn from each other. But there's 11 of us in that group, and there's 300,000 financial advisors in the United States. And obviously there's probably, some more, Bitcoin IRAs that aren't a part of the group, but that's like the best benchmark I have of us, really kind of being in the niche of it all.
Yeah, well, you and I were talking before we press record here about your work as a financial advisor. And so because you wave the flag of Bitcoin financial advisor, let's say I show up to the office one day and I'm like, Wyatt, I really want help with equities or I want help with a bond strategy. Do you turn me away? Do you still kind of help me out, or how does that work?
Yeah, we don't turn anybody away, and we do have clients that are, strictly in TradFi right now, but I do think it's my fiduciary duty to, talk about Bitcoin, and, depending on what stage of the journey they're in, it's fairly common for people, to still be kind of attached to some of these, FUD narratives, and that's going to be a little bit longer journey for us to kind of debunk some of those. And that relationship, investment advisors have with our clients is, a trusted relationship that's built over, time. And so when we start working with them, in 401k capacity or managing, their equity portfolio, we do talk about Bitcoin, try to identify where they're at. I created a little menu for them to kind of select. It's like, okay, are you interested in the economic side? Are you interested in like the tech side? And that tends to help at least get the conversation started. And for people like gold bugs, it's fairly easy, bridge to cross because they know the money's broken. They may just not understand, Bitcoin or have some reservations that, we can address. And so we still do service, those folks, certainly won't be recommending, bond portfolio. That's fake. And so we definitely steer clear of that stuff. But we kind of view equities as kind of a liquidity pool or like a unit of account or store value. So I'm not, particularly bullish on equities. Certainly not a fan of just kind of this passive index investing mindset that has become, very prolific over, probably last 15, 20 years. We try to stray away from that. I'm pretty bearish on the S&P 493. And so if we do have equity exposure, it's, more centered around scarce real world assets. If they have some sort of cash flow component to them, that's great. But a lot of the times, even my Bitcoin clients want exposure to traditional capital markets, which is fine. It's just kind of better understanding the context of what those holdings are meant for in our portfolio. And sometimes, we can view that more as a savings account, as an investment account, especially if we want to, preserve our Bitcoin. And I should caveat, educational purposes only, not financial advice, thoughts and opinions of my own, and not the view of my firm.
Okay, first, very well done with that. Your legal team or whoever you have on your legal side, super excited you just said that because I've done podcasts for so long. We've had to punch that in at the end where it's like, oh, I'll have to do an outro where I'm like, by the way, everything that was said on this podcast that you listened to, so good job, well done.
Thank you.
I'm going to skip ahead. And I know we're talking about Basilic, but the things I wanted to talk about in this episode with you specifically are Basilic, because I think it's awesome. The book, which I have in my hand, The Bitcoinization of Finance, and then the event that's coming up at the space, as you are a huge part of the space. But you just mentioned something, and now I'm rummaging through the book, and I made all these notes in the margin. I feel like I was back in grad school again. But you talked about the portfolio, right? We could joke about bonds, and I love that. That's going to be a fun clip for everyone to watch on the internet. You talked about the thing that Michael Saylor shared in Nashville in 2024, where he laid out like, are you a maxi? Are you a double maxi? Are you a triple maxi? Are you a ninja level maxi? And I'm struggling to find that in the book, even though I did have it outlined. What are you personally? And if you don't want to share this, I totally think that that's fine too. And if you don't want to share your personal, like where you are, here we go. Thank you. So in the book, it says normie is 0% Bitcoin, invests only in traditional assets, as we were saying, bonds or maybe equities. Bitcoin, 10%, modest Bitcoin exposure. Bitcoin Maxi, 80%, heavy allocation to Bitcoin, but no leverage. Double Maxi, 100% plus debt, uses leverage debt to buy more Bitcoin. Triple Maxi, so it wasn't Ninja Maxi, Triple Maxi, 100% allocation to Bitcoin plus double debt plus a tax strategy. Optimizes for maximum Bitcoin accumulation and relocating to a low tax jurisdiction. Which one are you? I'm going to go ahead and guess that you are not a normie. I'm going to guess that you're not a triple maxi because I believe you live in Colorado and I don't see that as a low tax jurisdiction. So you have three options, Wyatt. Are you a Bitcoin at 10%, a Bitcoin maxi at 80%, or are you a double maxi at 100% because maybe you've taken out some debt to buy some more Bitcoin?
Yeah, no, it's a great question. I do love just kind of that simple framework he lived out. I am a maxi. Not that I'm opposed to debt. Some people have a moral qualm to it. I just have to understand my personal risk profile, which is what everybody comes down to. And there's a decent amount of risk investing in Bitcoin and then being an entrepreneur as it is. So I try to manage all those, and people already think I'm crazy. So it really does come down to your personal preferences and financial situation. But I do like I said, high level. It's almost kind of a fun meme to play with. And when we're working with our clients at Basilic, sound money strategy is really, is centered around sound custody solutions. So if my clients have Bitcoin exposure, it's going to be 99% of the time bare asset spot Bitcoin. And we've partnered with Unchained to do that. They're a phenomenal partner. They have a great custody solution. I think they're probably the premier Bitcoin financial services company in the country. And what we've been able to do with them is, again, help meet clients where they're at. So depending on how comfortable people are with the asset and the technology, they can hold two keys. Unchained has one. We have an advisor model where client holds a key, Unchained holds a key, and I hold a key in the quorum. Or we can offer them multi-institutional, multi-sig, where two U.S. domiciled trust companies own a key on their behalf. And we work with clients to help them understand there's no silver bullet when it comes to self-custody Bitcoin. We identify it in terms of risk surface area, and we want to reduce and shrink our risk surface area. And everybody's going to have their unique trade-offs that they're willing to take on. But the moral of the story is we don't want to sacrifice everything that comes with holding our own keys, being in full control of our wealth, being uncensorable, because we're not really in Bitcoin for just the price exposure. That's obviously great. It's a big part of our financial lives, but there's so much more that come with it. And so understanding that's a foundation, and when we start building on the double maxi and the triple maxi meme, we're able to do so because we own bare asset spot Bitcoin. And so a lot of my clients have been interested in lending products as of late. I think this is a very interesting subsect of the Bitcoin Financial Services Summit, or Bitcoin financial services industry. Sorry, I've been on a repeat here with that lately.
No, it's fine. It's fine. We're going to get there.
Get there. And, that has some really interesting dynamics to the Bitcoinized financial system at large I'd be happy to get into. But I'm very happy with how I'm seeing that industry subset of this industry moving, just because I think there's been already some very crucial lessons learned from the 2022 bear market and the errors of Celsius and BlockFi and rehypothecation. These companies have gotten much better with their custody solutions, proof of reserves, being transparent how that collateral is stored. And so do have a lot of people interested in leveraging their Bitcoin position. And if you do decide to do that, so it's important to understand what you're getting into and read the fine print. And we help with this, and we try very hard to only work with Bitcoin only companies. I think this is crucial to supporting the industry as a whole. And I talk in the book too about we have to hold ourselves to a high standard. And I think it's much better for us to self-regulate and then do nefarious things and almost force the hand of regulators from the top down. Like, we just don't want to find ourselves in that position. And so Bitcoin companies, I feel like, tend to do it the right way to begin with. Proof of reserves, multi-sig, kind of these core fundamentals. They just have integrated directly into their business from the get-go. And so if you do decide you want to take out loan, how much of your Bitcoin are you using? And an over collateralized loan is it's an old thing, and this is kind of the Bitcoinization of finance at play. It's like nobody's reinventing the wheel here. They're just taking old concept and applying it to Bitcoin. So just simply, if Bitcoin's $100,000, you want to borrow $100,000, you have to put $200,000 worth of Bitcoin up as collateral. And obviously in that situation, you want to be cognizant of the price of Bitcoin. So if it ever does dip, you may have to top off your collateral so you don't get liquidated, and that's why you never want to use all your Bitcoin stack as collateral because that puts it at risk. And so it's a very interesting landscape right now, and I'm very happy to see how it's evolving.
I thank you for answering that. A lot of people, they get really cagey, even the Bitcoiners who are really loud on Twitter all the time, and you ask them, are they a Bitcoiner, are they a Maxi, a double Maxi, triple Maxi, and they'll just fold into their little cave of privacy there, which is fine too. So thank you for being open about that. Do you think there's a future in which there will be a product or there'll be a company that you trust in? I know this is supposed to be a trustless world, that you're like, yeah, I'll put up a certain amount of my Bitcoin, 5% of my Bitcoin, because I'd like to get some yield, or, it's 10 years down the line and the family wants to go on a vacation and I'm going to put this money up. I feel good about it. And I'm going to take some fiat out because it's funny money. In what context are you ready to take some debt on your Bitcoin or take out debt to buy Bitcoin? In what world are you going to feel better about that?
Yeah, so I feel good about the industry as a whole as it is today, and that really is kind of the Bitcoinization of finance thesis. Is we need traditional financial tools, products, and strategies applied to Bitcoin in a Bitcoin-focused ethos to further a hyper-Bitcoinized world. There's, Jesse Myers, I have it in the book. He has that amazing graph. It's a store of value assets, globally. And what we're really seeing, and Saylor's obviously kind of leading the charge on this, and in addition to numerous entrepreneurs building in the space, we need the instruments to get dollars into Bitcoin. That's just fundamental, and that ultimately what the finance industry is or can provide to Bitcoin. And so when I double click into that a little bit more, I kind of call this diversifying within Bitcoin. And there's a great company out of Seattle. It's called Build Asset Management. I'm very skeptical and hesitant of yield on Bitcoin. Bitcoin on Bitcoin yield is extremely difficult to do. There's only one scenario I've seen so far that kind of passes my smell test, and they didn't end up rolling it out, but they kind of do, from my understanding, something similar with their life insurance product. Is Meanwhile, that's a company fully denominated in Bitcoin. They were going to roll out a private credit fund where it's Bitcoin in. So their investors put Bitcoin in. Their asset management team identifies companies willing to take a loan in Bitcoin. That loan is paid back in Bitcoin, and then their investors are returned in Bitcoin. So that works as yield on Bitcoin because it's fully denominated in Bitcoin. The risk there is it's fairly challenging to identify companies that are willing to take a loan in Bitcoin and have the capability to pay back a loan in Bitcoin. Anything other than that, I'm pretty skeptical of. The layer twos really aren't my thing. Anything that's wrapped Bitcoin, I avoid because we're just not Bitcoin at that point. However, there are some interesting things being done on the dollar front, which we're less excited about, but understanding fixed income or, a consistent income stream could be valuable for Bitcoiners that have dollar denominated liabilities. And so what Build Asset Management does is they also have a private credit fund, but it's dollars in, dollars out, and they use those dollars as a liquidity provider for Bitcoin collateralized loan servicers and originators. So they essentially own the interest on a Bitcoin collateralized loan, and that interest then gets passed on to their investors. And so I love seeing things like that and products like that, because so if you need fixed income, I'd much rather, direct you to a product like that as opposed to just, buying sovereign debt, which you're going to get paid back with fake printed money, and then you're not actually, getting anywhere. So I think that is all very exciting and important, for Bitcoiners.
Yeah, just while we're here, and I realize that separating Basilic from the book makes no sense. It's one and the same conversation. You're sharing a lot of your core tenets of Basilic through the book, and in many ways, the book is a way to get people towards Basilic and say, hey, I kind of know what I'm talking about here. I can see the blended future of how TradFi supports Bitcoin, et cetera, and the Bitcoinization of finance. I want to jump right there because you mentioned this in Bitcoin for Millennials, but I think this is a really important thing for people to hear from you in this moment. And I'm excited. When I create every podcast, I just think of it like a moment in time where Wyatt and I got together for about an hour and we talked about Bitcoin. And it's interesting to see then in 5 years, 2 months, 3 years, whatever, in the future, what was right and what was wrong about what we said. Or, you said on the Bitcoin for Millennials podcast, you're not really into the ETFs, I believe. And a lot of people from TradFi and many of my friends who are like, oh, they want to get into Bitcoin, but they don't want to deal with self-custody. And much of your book is dedicated to, look, this is how we need to take care of this. So it clearly is a friction point for people that are kind of getting into Bitcoin from TradFi or moving some assets over. I believe you said you weren't that bullish on ETFs. And then I want to ask what your thoughts are on MicroStrategy, because I tweeted this maybe a month ago, but like Michael Saylor is the biggest marketer Bitcoin has ever had, and yet he convinces people to buy in equity. So that never made sense to me. It's like me telling you, okay, Wyatt, these are the best burgers on the planet, but why don't you buy these hot dogs? And then people do it. Like it's mind blowing to me. So for you, and maybe your laugh tells me something about your thoughts on this, but like, how do you engage with your clients when they're like, okay, I feel like I have different ways to get Bitcoin exposure if I don't want to go the Bitcoin route, Wyatt, right? I could do Bitcoin. I don't know. Cold storage scares me. Or I could do ETFs, or I could do strategy, or I could just buy Coinbase stock, Coin, because it's an indirect exposure mechanism to the overall price of Bitcoin, more or less. How do you kind of navigate that? And I really want that clip of you saying this or that about strategy.
Yeah, absolutely, man. So I'll kind of start from the beginning and work my way up to that. And so the ETFs are important. They obviously, smash records for ETF inflows, which is cool because I do think that was an important moment in time for Bitcoin to kind of get, not that it needed it, but it does, I think, help with the sophistication and kind of general market view of Bitcoin. I do think that was an important step. And I'm not a fan of the ETFs personally because, like I was saying earlier, it's like we're not in Bitcoin for the price exposure. We're in it for price exposure plus all these other things. And ETFs just gives you price exposure. There's been some important developments. I'm certainly no fan of these guys, but credit where credit's due is BlackRock. Earlier this year applied with the SEC for in-kind redemption. That's just an important plumbing thing to prevent rehypothecation and the risk of paper Bitcoin. There's some nuances there. Retail clients don't have access to in-kind redemptions. That's reserved for institutional clients. But most commodity ETFs, you can do in-kind redemption. Again, that's not a new thing. It's just important that it's in the rule book that the Bitcoin ETFs have in-kind redemption. And if we do have exposure to the ETFs, it's generally because we're constrained in some shape or way. So a lot of 401k plans, can't invest in spot bear asset Bitcoin. So let's at least get price exposure to Bitcoin via the ETFs. And that's important to the overall financial plumbing system, that you have options just in case you are constrained for whatever reason. The treasury company phenomenon is interesting. I do think we're at, a fun and interesting point of time. So the currency maturation cycle, Bitcoin, I think, is still in largely store of value, and then there's medium of exchange and unit of account, but we're definitely starting to transition towards medium of exchange. And while we're between store of value and medium of exchange, we're going to be kind of in what I'm deeming this dollar return on Bitcoin exposure market. So dollars are still kind of the preeminent unit of account and medium of exchange, and a lot of people have dollars and they will invest dollars and get dollars back via Bitcoin kind of being the underlying asset. And I would put Build's private credit fund in that bucket, or in that market. I think the treasury companies are in that market. And so what they're doing, Build and the treasury companies, so they're taking these TradFi products, applying them to Bitcoin, and this is a way for us, as I was referencing earlier, to siphon dollars into Bitcoin, which is important for hyper Bitcoinization. Like, that needs to happen. Like, these tools need to exist. I just think the lifespan on them will be limited, and so that may be 10 years, maybe 50 years. Like, I don't know, but it's an important intermediary step in the meantime. What's particularly interesting, and I'm happy you brought up, Coinbase as, a proxy or synthetic exposure, is this market, this dollar-denominated return on Bitcoin exposure market. You're really, there's two things to consider, like a competitive, advantages. As an investor, you want the least amount of synthetic exposure to Bitcoin. As a product builder or as somebody offering an investment, your advantage is going to be driving the highest return. And so it's ultimately kind of finding the balance of those two things. So I do give Saylor a ton of credit for what he's doing for the corporate finance industry. I do think he will go down as a titan of industry type figure for what he's done for corporate finance. But what I get concerned about, or I'm hesitant about with the treasury company movement, is you have extremely synthetic exposure to Bitcoin. I'm more open to like the private credit fund model, because there's like one, maybe two layers between you and the Bitcoin and generating a dollar denominated return. Saylor's, preferred shares, as an example, like there are a lot of layers between you and your Bitcoin. Some of those preferred shares get paid out in common stock. So if you're a common stockholder, you may be diluted like 6 different ways by just holding their common shares, depending on what Saylor and his executive team want to do in the moment. So important vehicle. I think the lifespan on these vehicles are limited. It's just kind of the hot thing right now to use equities, common shares, now preferred shares, as a tool to pull dollars into Bitcoin. As an investor, it's important to understand that's probably, I could be proven wrong on this in the future, but as far as I'm seeing what the current marketplace offerings are, that's got to be one of the most synthetic ways to get Bitcoin exposure, and their sales pitch is ultimately they'll outperform Bitcoin. TBD, like if they do, great. If they don't, and so be it, I guess. But they're using, and it's become pretty commonplace to use the common and preferred share tool. Again, I don't have anything against that tool to get exposure to Bitcoin, and I think it will work for a finite period of time. I don't think it will be the most pertinent in the future.
What's that period of time?
Again, just kind of like that transitionary period where this dollar denominated return on Bitcoin exposure market exists and has purpose in the broader capital markets. And I think that really exists until Bitcoin is a medium of exchange. And so the return opportunity is obviously biggest right now when we're closest to store of value. And then as we continue moving through that currency maturation cycle, the value of that will start to decrease. And so, if we kind of like charted it out, I would anticipate like somewhere between medium exchange and store value, we just start, pricing everything in Bitcoin. That marketplace doesn't have a purpose anymore.
Yeah, and I want to just go to the book, page 35, when you start to talk about the financialization of Bitcoin. You say Bitcoin is still a nascent asset class. while it has accomplished a lot in a short time, it is still less than 2 decades old. It is very much still in the first phase of currency maturation, store value, as you're just talking about now. Bitcoin is a global grassroots movement, meaning the community and network participants will determine the roadmap for Bitcoin, and then you get into how it eventually will be a currency, which I think is awesome. And this just dovetails so well with my previous guest, Jesse, because Jesse and Amboss, what they're doing is they're really creating the payment rails for global Bitcoin adoption on Lightning. And I had never thought of it, so this is why I love podcasting. But you're totally right. As it goes from a store of value into something we're going to start to use every day to buy things, then it's just no longer going to behoove people to buy MicroStrategy stock thinking that this whole idea of hoarding it is going to continue to be a thing. I mean, in that world where it's a medium of exchange, that's where, kids are like the job I had in high school, I worked at Quiznos. That's where the kids are going to be working at Quiznos. Instead of making $7.25 an hour, they're going to be making that in sats, right? And in that world, I could see where strategy isn't going to be a thing. I did want to ask you about that though, because that's something that a lot of people talk about. And for me, it's a trade, not an investment. If you're going to buy into any one of the digital asset treasuries, because now there's not just Bitcoin ones, there's Ethereum ones, there's like Tron ones, there's Avalanche ones. I mean, it's getting a little out of control. Talk about the book just super quickly before we wrap this up. My, as I've already said to you, I think my theory is you wrote this to be kind of like a beacon for what you're doing at Basilic, and maybe also just to organize your thoughts about how you think about the Bitcoinization of finance. How has the book gone? How has it been received? Have you gotten any feedback that you're like, oh, that's not why I wrote the book, but I love that you got there?
Yeah, man. No, thank you so much. I'm very appreciative of that. I've gotten a lot of good feedback, which I'm super appreciative for. People have been super nice. My intention for the book, wasn't. I mean, there's a lot of Bitcoin books out there, right? So I wasn't trying to recreate the Bitcoin standard or write another intro to Bitcoin book. This was meant to be more focused on the finance industry, finance professionals, kind of people more in like the finance, economics weeds. And it really, the precipice was it. Like I mentioned, I hang out with Bitcoiners every day. My office is at the space. I'm surrounded by my favorite type of people. But I would get a lot of crap for working in finance. Or like, I don't need you. I buy Bitcoin. It's like, that's great. I do too. That doesn't mean there's not a role for finance to play in this. I really, in the book, try to emphasize that every industry is susceptible to fiatness, like fakeness, like, fiat food. I use as an example in the book, and like the degradation of our food system, I think could be traced back to, our money. And so you can insert any industry, and I kind of broadly describe finance as the business of money, so it's particularly susceptible to fiatness. So understanding, don't mean to like broadly defend finance, but I also think it's silly that Bitcoiners have such a big, qualm with it, because there's nothing, I don't think, intrinsically wrong with an options contract. This is a business contract where two parties, decide to take, either side of a trade. And it's like, what's wrong with that? Why can't that be applied to Bitcoin? And I think in order for us to achieve hyper-Bitcoinization, we need the tools, products, and strategies that traditional finance has already developed over hundreds of years, and just apply it to Bitcoin. But I use, gold really as the example here to kind of set up the argument for a Bitcoinized financial system. And so, Lynn Alden does, an amazing job explaining how, money is a technology, and, gold, has all the sound money principles, but when, the telegraph was invented, information could travel at the speed of light, but we have this, physical, bulky, money that, is hard to, transact and move. And so we kind of see gold getting displaced by, fiat money. And, in that graphic on the book, the currency maturation cycle, I've overlaid a gold coin moving backwards across that graph. And ultimately, gold was a unit of account. Then it got demoted to medium of exchange. Then it got demoted to a store of value. And so it has 0% monetary value and 100% financial value as a store of value. And so we don't want that to happen to Bitcoin, but we just need to be cognizant of what happened to gold. So we kind of, learn our lessons and move forward in a more educated manner. And people have been complaining that the gold markets are manipulated for decades now, and that's largely because there is so much paper on top of gold, and there are some, I think, market risks that a lot of the issuers of paper also, or a lot of the paper issuers of gold also custody a lot of the gold, and gold custody is challenging. But 99.6% of gold futures are settled in paper. Like gold, the physical asset itself, is never settling and trading in kind. And so what Bitcoin allows us to do as an internet native digital bearer asset, its super features is allowing its users to natively custody the asset themselves. So we actually decentralize Bitcoin custody, which is amazing. And a Bitcoinized financial system works if the asset itself is settling and trading in kind. So you can have a futures contract on Bitcoin, that's fine. Just settle the asset at the end of the contract, and you don't have this paper dislocation built on top of it. And I think Bitcoin has a lot of unique features that allows that to happen. And I think if we embrace those features, we'll have a Bitcoinized financial system that is much more true and robust and ultimately good for the world.
You just talked about the papering of gold and how that is a fiatness of gold in some sense. And something in your book that you called out that I wanted to touch upon, and then we can move on to talk about the Bitcoin Financial Summit, as that was already on the tip of your tongue, is the Fiat Blackhole exploit. I had never heard about this. Till I read it in your book. And I guess I could kind of read into it a little bit, but instead of me reading, do you want to explain what that is in as many words? Because when I think of threats to Bitcoin, I only have one, and that is quantum. And I think that we will overcome that. I just think it's going to be an unpleasant time for Bitcoiners. But can you talk about the Fiat black hole exploit? And if you don't remember that off the top of your head, because you have a lot of things going on in your head, I could read it. I want to get your thoughts on it.
This was actually brought up to me by the Brains team, and I'm trying to find that section in my book too. If you have it,
it's 146. I can read it. It says, coined by Brains chief of product and strategy Thomas Grief, FBHE, or the Fiat black hole exploit, is a hypothetical but increasingly plausible dynamic. The concern is that the unlimited supply of fiat money is weaponized to absorb large swaths of Bitcoin for those who construct the appropriate financial structures to do so, who basically financialize Bitcoin the best, essentially, is what I read from that. The risk here is not just centralization, but fictionalization, which gets into the fiatness. Bitcoin becomes so intertwined with fiat-denominated products that it no longer serves its purpose as a sovereign bearer asset, altering how it is perceived and used, which is kind of what you were just talking about with gold, with so much of it settling in paper. If any well-capitalized entity uses fiat's infinite nature to accumulate a significant percentage of the Bitcoin supply before the broader market is aware, it could shift the power dynamics of the asset without violating any consensus rules. So now let me, saying that, ask you a question. Do you think that's possible? I think the only country who could do that because of the global reserve currency is the United States. But I don't think the United States could do that quick enough to where it's going to accumulate so much Bitcoin that it's going to cause a problem or break consensus. But I guess theoretically it's possible, but that doesn't mean that practically it's possible. But do you see where it's theoretically possible?
Yeah, I do, and I would agree. I do think it's theoretically possible. I gotta give Thomas credit for this. I include in the book because it's an important thought exercise, and just because I tend to think Bitcoin fixes everything, like the meme, but in reality, I get why people have gripes about it, overused a little bit, and so it admittedly is challenging for me to identify threats with Bitcoin sometimes, just because I'm so steep into it. You get in the echo chambers, and I was like, man, we're resilient, we're anti-fragile, what could possibly happen? And so trying to have some humility on identifying potential risk to a Bitcoinized financial system, and I think this is a good one. It's hard for me to imagine this scenario happening, but black swan events do happen, and what I think we're ultimately getting at here is the importance of staying true to the Bitcoin ethos, and that's why I try so hard in the book to really emphasize a hyper-Bitcoinized world I think is great. A Bitcoinized financial system I think is great. That doesn't mean there aren't potential pitfalls we could fall into. And so really try to emphasize like the importance of, self-custody in a Bitcoinized financial system. Like I mentioned earlier, making sure the asset settles and trades in kind. So inherently it isn't wrong or bad to apply these traditional financial tools, products, and strategies to Bitcoin. But if we're doing so, we have to do it the right way. And that is, case in point with the in-kind redemption of the ETF. And we have to fight off the, paper Bitcoin threat. And, I encourage everybody to, whatever industry they are in, apply the principles and values of Bitcoin to that industry. And the finance industry isn't, immune to that. It's like we have to, apply those same values and principles as well. I think that really does mainly revolve around sound custody solutions and trading and settling Bitcoin in kind.
Yeah, because when I read that, I just see somehow the United States prints $1 trillion and it just somehow goes to the miners, goes OTC, it goes any way it can, and it infiltrates and it buys 10 million Bitcoin or something right now, whatever it would be. I don't know, $1 trillion of Bitcoin. But I just think it's so difficult to make that happen. And I just think the miners only have so much and they're not going to give it up. Like the people who hold the Bitcoin are not going to give it up and at almost any price. So even if you're like, $1 million for Bitcoin, they're like, if you're going to give me $1 million for Bitcoin today, when the market's telling me it's only 125, I'm like, yeah, I guess I could do that, but also like I might as well just keep wait. I might as well wait. Your desperation clearly is going to be greater than my is bigger than my patience right now, so I'll just wait type thing. But I thought that was interesting that you added that. Last question on the book, and then we will get into the financial summit, is this tax strategy. That is the part of the triple maxi where you're all in on Bitcoin. You are probably leveraging debt or taking out debt to maybe buy some more Bitcoin, and then the tax strategy. What is something really easy that people can do? And I'm asking you for myself here. What is something that I can do, or anyone listening who can do, who is a Bitcoiner, to somehow leverage the tax strategy to get away from this? Now, one thing that you called out in the book that I'm not saying, you're saying people should do, is it looks like you can still do the wash, right? Where I could sell my Bitcoin at a loss and take the loss on the books and then buy it back so I still own that same amount of Bitcoin. Is that something that, the story in my head is that the government's going to eventually figure out how to, like, who did that, and they're going to come after you because it's all on chain. But what are things other than maybe and you can tell me it's not the wash rule or whatever, other than that, like what are some easy things that people can do right now to leverage the way the taxes are set up today to minimize their tax exposure?
Yeah, no, there's a handful of things. I've learned a lot from Matt McClintock at the Bespoke Group. They've done some tremendous work on this, and so depending on how much Bitcoin you own, your potential tax liabilities, a lot goes into it. Mark Moss has been really sounding the horn. Is like a lot of wealthy people, like they borrow against their assets and they don't have income because that loan income isn't going to be treated as ordinary income, and so you can lever against your Bitcoin to get dollars to satisfy any dollar denominated liabilities, and you reduce your potential tax liability. That's one way. There's certain tax qualified accounts in the United States, like 401ks or IRAs. Unchained has a phenomenal IRA product where you can actually hold your own keys and you're still getting the tax benefits of that IRA. So I kind of think of it as like it's a cold storage vault with like a little IRA paper shell around it, but you still hold your keys. There are different trust dynamics, different kinds of generational skipping trusts or what have you, that can potentially benefit your heirs as far as inheritance tax or different tax strategies or tax mitigation strategies around the inheritance and gifting of Bitcoin to the next generations, and then I would say kind of lastly just different custody solutions. And I don't get into this with my practice personally, but in theory is possible with just different jurisdictions and owning your Bitcoin in more tax friendly jurisdictions.
Yeah, I think that I tell everyone the future of wealth is Bitcoin and multiple passports. So we'll see if that shout out pans out. We are recording this before this episode comes out. This episode will come out on October 14th. Now, I believe the 16th or the 17th or the 18th or the 19th, when does the financial summit start? I know it's at the Space, let's dive into that. I believe this is the inaugural summit, and I believe that you are probably the major catalyst in putting this together.
Yeah, man. No, thank you. I'm excited to chat about this. One thing I did just forget that you brought up is, the tax loss harvesting. There are some more active strategies I've seen. It's kind of a little taboo in the wealth management industry. Why pay for active management when I can just buy a whole Bitcoin? So what some active wealth managers are doing is, if you do have a loss in Bitcoin, you can sell that. There are some write-offs you can get for selling an asset as a loss. There's some nuances there between a security and a commodity. Bitcoin is currently viewed as. So that is a strategy I'm seeing too on to help with the tax liability of Bitcoin. Also some interesting products, like different life insurance products that Meanwhile is developing. Those have different tax consequences that could help reduce the tax liability, especially in the future if that policy is ever paid out. So this stuff is always a moving target. If you recall, at the end of last year, there was a big rush. The IRS was going to change a bunch of rules, and they didn't. And so it's constantly evolving. And to me, I mean, it's the pinnacle of fiatness is the IRS. And so you never know what direction they're going, but there are like some blocking and tackling things you can do to try to keep more money in your pocket and less in Uncle Sam's. But the Bitcoin Financial Services Summit, so it's myself, my colleague Jordan Guest. He's the founder of BitMint. He's a Bitcoin CPA, so he approached me and wanted to do this and wanted to do it at the space. I was just on board from our first call. I was like, oh yeah, this needs to happen, and just plays really well into what we're doing at the space. We try to focus on what we call summits, which are small conferences. The venue maxes out about 150 people, and so we just like to be very hyper focused on one topic and try to bring as much signal as we possibly can. And so I'm super proud and happy with how this is turning out. The summit is next week in Denver at the space, October 16th through 18th, and really the whole idea here is one, kind of selfish, other than two, kind of altruistic. The selfish side of things is I try to be as in touch as I possibly can on the developments in the Bitcoin financial services industry. In my role as an advisor, I benefit a lot from the lending products, or Horizon and OrangeBridge have developed home equity line of credit products where you can access idle equity in your home and purchase Bitcoin. So the fact that there's entrepreneurs in the Bitcoin space that are building these projects give me more tools to ultimately help my clients. And I'm financial professional. I can't give tax advice. I'm not a lawyer. I can't write like trust documents, and so I don't have a lot of contacts to refer people to estate planning attorneys or CPAs. It's growing, but like we were talking about earlier, there's just not a lot of us out there. And so selfishly, I want to get everybody in a room so we can learn from each other, so we just as a industry as a whole have more knowledge to work with, more referrals and ability to help people out. And so I think it's going to be really valuable getting financial advisors, CPAs, estate planning attorneys, asset managers, high net worth individuals in the same room to learn from each other. And that's ultimately what this is about. And what we're really trying to do is push the industry forward in the way we would like to see it. And like I was saying earlier about that self-regulation aspect of one of our sponsors, Revolution Mortgage, they're a local mortgage company in Denver, and they approached us where they have challenges in their mortgage industry about recognizing Bitcoin as an asset when it comes to underwriting a mortgage. And they came to us and it's like, we're Bitcoiners, we'd like to do this, we just don't know how, and we want to talk and learn from the people that are going to be in the crowd on how we can better our business to better service Bitcoiners, which are obviously a growing wealthy market. And so I think things like that are just awesome. And what this is all about, just getting folks into place to actually learn from each other. I know we've talked about the space before, and you're a huge supporter, which we're very appreciative of. And nothing gets beating Bitcoiners in real life together.
Yeah, I was very fortunate to be there for the space's inauguration, and I just think it's a special. I think it's a special community that you guys have there, and it's going to continue to grow. And with the space now, I know you guys do monthly, like there's all these types of events that I see just through your social media at the space. Has the Heat Punk, I think you've only had one of those summits. Are you going to have another one of those summits? I know we're getting away from the finance. You're going to have another one of those? Because I feel like that was a massive win. And I say that because Shannon Squires, who's the chief mining officer at Compass Mining, where I used to work, said it was one of the best events he'd ever been to. And I do think the future of Bitcoin is under 200, under 250 people events. They're high signal and very, very curated. This thing of like going into these expo centers of swag, and you have like marketing people that are fronting for these companies and they're not even Bitcoiners. And you have like the media person that's maybe not even a Bitcoiner. It just all seems super fiat-y, if you will, or fiatness, as you've said. So with that said, are you going to do another Heat Punk? And also, when this is a success, will you do another one? And I'm throwing another question. Are there still tickets? So that's 3 questions. Are you doing another Heat Punk? Because that was a success. Is this one going to have a follow-up? Because it's going to be a success. And then are there still tickets? Because this is going to come out on the 14th, and people could see this and be in the Denver area, or just take a flight in, because it's super easy to get to this space once you land in the airport. Yeah, those are the 3 questions.
Absolutely, man. We are running back the Heat Punk Summit. My best
Great.
friend Tyler Stevens put that on. It was a smashing success, not only for that industry, but the space as well. He just released the dates. I think it's the second to last weekend in February. It's on the website though, denver.space, to confirm that. But we are running that back. I'm super excited about it, and he really kind of proved that model out for us at the space, that this is something we should be really focusing on. And I totally hear you, where it's like the Bitcoin conference, a league of its own, 30,000 people, whatever. Like, I do think a conference that big is valuable, just because so many people end up going. Like, just me personally, like, it's a good opportunity to connect with partners and vendors and meet new people. So there is some benefits of the size, also a lot of drawbacks that you mentioned. And one of the things I'm really proud of the Bitcoin Financial Services Summit is our speakers are like 85% executives or founders of their respective companies. And so these are people actually in the weeds doing the work, got started on square zero, and have built their companies up from there. And so I think it's going to be very high signal in that capacity. And we try to be very intentional about the agenda. We have really long networking breaks. The talks are great, but ultimately when you go to events like this, you want to talk to other people in the room and get to know them and understand their businesses, how you might be able to work with each other and whatnot. So we have a lot of long networking periods, group lunches. Ben Justman from Peony Lane and Tommy, he is a bourbon bar in Louisville that Jordan's really good friends with. He's coming out, so they're going to be doing group bourbon and wine tastings. And so outside of the talks, just giving people the surface area to organically meet and talk to each other. That's not in an expo hall with 30,000 other people. It's like, no, there's like 150 of us. It's much more approachable, and people are a lot more accessible, and you kind of almost you're able to let your guard down a little bit in more intimate settings, and just get to a lot more real conversation. And so I'm super excited about all that we got going on.
Tickets.
Oh,
Still
yes.
tickets?
We do have a handful of tickets left,
Okay.
not a ton. So encourage people to hop on that. They can be found at denver.space.
Sweet. I got one last question for you, and that is, you've called it the Bitcoinization of finance. We can run with that. What is the signal there, and what's the noise in that process where we go from Bitcoin being the store of value to a medium of exchange to more TradFi products maybe supporting and propelling Bitcoin forward? What's the signal and what's the noise?
Yeah, the signal is identifying the companies and individuals that are using these tried and true traditional financial tools, products, and strategies, and applying them to Bitcoin. I would say, I've mentioned Meanwhile, like case in point, like Bitcoin denominated life insurance, like that's freaking awesome. That is signal. I know people who have utilize their services. I've got to know their team a little bit. I think they're doing amazing work, and that is going to help Bitcoiners, because as great as owning spot bear asset Bitcoin is, like, why won't we also utilize some of these tools on top of Bitcoin? The noise is I would say anything crypto, yield generation, any sort of wrapped product over synthetic, exposure to Bitcoin, paper Bitcoin. We want to, avoid, people smearing the good name of Bitcoin to further their own financial gain.
1000%. We still see a lot of that today. I'm going to go ahead and add in a bunch of links. Normally I'm like, oh yeah, just like hit so-and-so up on X, but I'm going to put in your X. I'll put in your LinkedIn as well. A lot of people feel more comfortable there. And I'm going to put in Denver.space because there's tickets. I'm also going to put in the Brains link. I believe it's on Brains where they can get this book, The Bitcoinization of Finance. And I'll put in all Basilic's information as well, the website and stuff, so people can reach out to you. And if you're watching this on YouTube, subscribe. Listen to this on a podcast platform. Please subscribe. Follow us at Future Signal XYZ on socials. Wyatt, as always, this has been great. I can't make the summit next week, but maybe I can make the Heat Punks in summit in February. We'll see. But anyway, thank you for coming on. I know you have a very busy week this week as it's the summit week, more or less. So thanks so much for hopping on.
Pleasure's all mine, Jarrett. I'm so proud of what you're doing, and congratulations, and thanks for having me on.